Yeah, hello guys. Hello everybody. It's another public session today. And it's actually a great time to have you. And I hope you're catching up very good. I hope you're doing very good, very great. How has been the market so far? How has been everything? How has been family? And I would like to hear from you on any of our videos that you have actually watched. I look forward to speaking with you. So on today's public session, it's been some time I've actually hosted a public session again like this because I've, um, I've been trying to make sure that I work on my goals, improve my trading skills so that the value can actually reach and it can be rich enough. That's what I mean. So, and improving in yourself, you have to give it time. And the more you improve in yourself, the more you can actually sell out what you have. You can actually sell what you don't have. So, and the best I can give is this through this public session. So, if anybody is interested in this public session, is a free room whereby everybody can join, and it's also free whereby you can watch on the YouTube channel. You can watch in your leisure time and still gain something. So, well, I'm just going to recap on the trading outlook for this week that just ended. That's the trading week that ended on Friday. So before the market close, what I trade is AUD USD, and I pick my trade. I actually have a video whereby you can watch how I pick my trade from the higher time frame down to the 4 hour time frame. How I read structure by structure, step by step guide on how to select my trade using technical analysis. So I consider market a pure market structure in that video. So you can watch in your leisure time how I choose my trade, how I select my trade from the higher time frame to my lower time frame. So that can help you a lot. So this is Super Hypers Academy. We are affiliate partner of HFM Markets. So HFM Market is a brokerage firm that gives us access to for us to register our clients and for them to have access to the financial market. So they give us the room. So we register clients under HFM Market. So every of our clients using Super Eagles Academy, we are affiliate partner of HFM Market. So I want to appreciate HFM Market for giving us the privilege for partnering with them. So let's go straight to today, and I hope everybody is all catching well. So without wasting most of our time, I just want to recap on what the market has done this week. Sorry, my chat has been so busy. If I go to my higher time frame, you see a lot of things, a lot of stuff there because I don't like analyzing the market and forgetting what I've actually analyzed. So, but I just want to make a quick recap. So, this is it. Sorry. So the market makes a high, makes a low, make another high, another low, then make another higher high, and another higher high. So every point in time, market has been making series of higher high. But the way I trade is when I see market making series of higher highs like this, it means that market is actually interpreting something. So I don't follow this. What I look out for is I wait. I try to interpret what this I is actually doing. What is the market actually playing out? What is the market players? What are they doing in this place? So why are they making series of higher highs? But what I do is that I will identify my external structure. So I know everything inside from this I to this place, everything inside there are my internal structure. So every highs and lows that market is just forming here is just to tell me that I am still inside my external structure. So the moment I get to this place, I'll be waiting for to short this trade. So I will have even got this pip. I think I got this pip. So this week, market has made a new high. Why did market make this new high? That should be the question. The question is there is still a point that the market failed to fill, which is in the weekly. If I check the weekly, there is a fair value gap in the weekly that the market actually come to validate here. So which is why the market actually make this new high to validate that weekly. It's been some time that I have pointed out that fair value gap, but I actually ignored it for some time because I felt the market might not get there. But suddenly after this whole push, then I look back to my analysis, then I found out that it was in the weekly fair value gap that the market actually reacted to, and market drops from that moment. So now the market has dropped from that moment. I can remember in my channel, in my group, I told them that after this sudden drop, that there is a fair value gap here. In my mentorship class, I teach fair value gap, the real fair value gap and the fake fair value gap. So this market actually failed this fair value gap, but there is a gap in the 5 minutes that the market actually come to fill. Let me show you in the 5 minutes. All right, so this is where we are. This is the fair value gap. It came to fill in the 5 minutes. Can you see that? So that is fair value gap. So if you want to understand fair value gap, you can opt in for my mentorship class. I will teach you how to find a fair value gap and how to take advantage of this fair value gap. So in the meantime, that is my analysis that I sent to the group, and I think my students and my traders, they took this trade and they enjoyed this profit. So even here, I knew the market is going to sell at this point, though I missed the trade here. And the reason why I missed the trade was because of my analysis that I did here, because I note that the market is going to move because of my fair value gap. So after pointing my fair value gap, how do I point my fair value gap? That is left for me to say if I want to let go of that information. So, but for what I know so far, the market is reacting so far here, and we'll be waiting for market to make a pullback to this area or possibly inside this pattern. Possibly from this high, or market coming back to test this supply. So once market come back to test this break of structure, and we can have another downward sell. So the reason why I said I lost this trade was because I was seeing a lot of stop losses here, which I know market players can play so much fun by clearing out the stop losses and making it move. But suddenly the market kept the body here and they break the structure for a new downward sell. So that was how the market. So I said here the market actually filled up a gap in the weekly. That is why you see a push. The news actually pushed the market to fill that weekly fair value gap. And after that, the market did not break structure, but come here to create a let me say, like a change of character fair value gap. Then from this place, we have a break of structure, then we have a retest, and we have a sell. So that is it. So let me go straight to how I analyze the market before I call it a day. I don't want to waste much of your time, so you will get bored while watching the video in your leisure time. So let me go to GBP USD. Let's see what we have in GBP USD. Okay, so this is GBP USD. You know, as I've said, go to your daily time frame. Let's see. I think I have done some analysis here before. Yeah, I did some analysis here before. So let me delete this. All right, so let's go. So what do I do? Let me delete this. Let me start again. What I do is that I recognize my daily high and my daily low. So this is my daily low, and this will be my daily high. I won't take this as my daily high yet because this has not validated my structure. So it hasn't validated the structure for me. So there is what called validation of structure. So for you to know how to validate a structure is part of what I teach in my mentorship. So before a market can validate a structure, there must be certain things market must actually do, which you must consider first. So once market does that, the market validate that structure, then you can do that as a high, and you can do that as a low. So now, once I recognize my high and my low in my daily, I come down to my 4 hour. This can be the general notion you've actually noted in the market. So in order for me to break down my highs and my lows, what I do again is that I recognize another high and low in my 4 hour because I am a daily trader. So I need to trade every day. So I recognize another low and another high here. I know that from this low, markets should react or market should break the structure. And once market break the structure, I should wait for a retest and a continuation of that price. So, but in the meantime, since I can recognize this as my daily low, and I can't recognize so far for me as a daily high, so here I clear up liquidity, okay? So, and I can't recognize this as the daily high. So what I do is that I will just wait for price to keep breaking structure. So, or I use my trend line to set as a guide for me. So I can take from here. I said, okay, this is my trend line. So once my price reaches this area, because of series of past price reaction, I am expecting price to also retest and make a continuation. If this has been my extreme premium price, because these market players will always want to sell the trade at a premium price. They want to sell the currency at a discount. They want to sell at a premium. If this is a premium price, then if you want to know about premium price, I also cover that in my mentorship. But because this is a public session, I will always try to cover the best that I know can help you in your trading decision. So I have said recognize your daily highs and your daily lows. Recognize another 4 hour high and 4 hour low. That will assist you in knowing the kind of structure you are actually trading. So this is my daily 4 hour low. This is my 4 hour high. So what I do, I can also take this as my 4 hour low and take this as my 4 hour high. So since my trainer has given me a guide, I'll wait for price reaction on this place. So I will come down to my 1 hour and see how price is reacting. If possible, I can see a change of price. So since my price is giving me something like this, there is a high tendency for me to see a pullback or sudden push down to this place to validate and clear out all stop losses below here, the market making a pullback and a continuation. So with regards to that, no matter how the market is doing, always put the mindset that anything can go on in the market and your analysis sometimes might not be right. So hello? Hello?
Hello. Good evening, sir. Mr. Ramji.
Oh, good evening. Good evening. I hope you are doing very great.
Yeah.
Have you
I'm sorry I came in late.
oh,
I just
have
trying to get it.
okay, I have actually covered a lot in the
Oh,
in the
no
session.
problem.
Okay, so let me just make a recap
Okay, okay.
on what I have actually explained so far. So I said the way we trade before might actually change. Before we actually start from the monthly, when you start your top-down analysis by recognizing your monthly high and your monthly low. And once you start from your monthly high and you recognize your monthly low, what next is that you have to see what direction is the market actually heading. And how can you know the direction the market is heading is by going to your weekly time frame. So all these analysis you are doing is called top-down analysis. So far so good. What I've been covering is that I start the analysis from the daily. Why am I starting analysis now from the daily? Why am I not starting from the monthly? It is simply because a lot of activities before it's going to complete on the monthly, it will take a whole full 1 month before a candle can complete. And I cannot wait for me to interpret that chart pattern. So the best thing I can do is to start my analysis from the daily, since I am taking my trades on since I'm starting my analysis from the daily and I'm taking my trade in the 15 minutes. So I don't need too much attention in the monthly and the weekly. So, but in order for you to understand the overall structure, the whole story of the market, so especially when you are new to that currency pair, so you have to start from the monthly. But in a situation whereby you've already understand the currency pair, the environment of the currency pair, start your analysis from the daily. Make the same step, your daily highs and your daily low. By the time you recognize your daily high or daily low, make that step down to your 15 minutes and take your trade and see if you are right or wrong. And it's not every time you'll be right in the market. So, as I've said, I have recognized my monthly high as this place and monthly low as this place. The question that should come to your mind is, how do I know my monthly high and my monthly low? The monthly high is the current high the market make before breaking a structure. So that is in this place, in my 1 month time frame, this is my monthly high, is a high that market makes after breaking a structure. So is a high that markets make before breaking a structure. Please give me some time, please. So sorry. So the low, how to recognize your low is a low comes after a break of structure. So like for here now, the market broke this supply zone. After it broke this supply zone, it rises, failed to break, failed to continue after this rise. This rise could not reach this resistance, to break this resistance. But since it can't break this resistance, and after breaking a supply zone, it retests that supply zone to create another low. This retest will become your current high, and this break of structure here, this low will become your current low. So that is how you recognize your high and your low on any time frame you are trading. So in order for us to capture what the market wants to do, because this is a whole 1 month, so we go to the weekly. If you see a means for you to draw a trend line, you can draw your trend line from here. If you don't see any means, you can leave it that way. So this, from this place, from this low, it shows that market is actually making a push to this upside. Now, there comes a new trend. What is going on? We have what we call external structure and we have what we call internal structure. Your external structure is where you have recognized your current high and your current low. Any other price that moves inside that high and low, they are called internal structures, internal patterns. For example, you have recognized that this is my monthly high, this is my monthly low. Every other moves here, in as much as this price that is moving has not broke this resistance, neither broke this support. Every pattern that the market might form here is called internal structure. So you are less concerned about here. It is until the market breaks here before you can continue a resistance or a buy. So in the meantime, in as much as market has created a low and it has validated that low, it is from that low you will start considering buying back that trade to a point of fair value gap. So these are actually new trends whereby one needs to understand in a mentorship class, because this is a public session whereby everybody have access to it in the YouTube platform. So this now, for example, creating this high, I will just go to my daily and understand the interpretation of this internal structure. Now, this is where I start my analysis. Since I have recognized my daily, my monthly high and my monthly low, I have seen how the market is moving in my weekly. My daily is where I start every analysis I want to do. What I will do again is that since I am entering my trade in my 15 minutes, the first rule of trading now is that recognize your trading time frame. What is a trading time frame? A trading time frame is a time frame where you execute most of your trades. So recognize your trading time frame and move higher like 2 to 3 time frames away from your trading time frame. For example, if you are trading in the 15-minute time frame where you execute your trade, move higher to like 4-hour or daily to start your analysis. It shows that you are intraday trader. So move higher to daily and start your analysis by recognizing your daily highs and your daily low. So once you recognize that, do the same thing, move down to your 4-hour. You won't put yourself in too much stress by starting from the monthly. So by the time you recognize your daily high and your daily low, you can still do the same thing for the 4-hour. Why are you doing this? You are doing this in order to understand how market is breaking structure. It's just as if you are mounting a step to go upstairs. You take a step, you come down, you take another step, you take another step, you take another step, you take another step. Now you are coming down as a downstairs. You understand? You are coming downstairs. You take it one after the other. You take one, you take the second stairs, you take the third one, you take the fourth one. So that is the inside conception about the market. It goes structure by structure. At every structure, one structure, another structure, another structure, in as much as it is making a high and a low, that shows that that market is traded. And that shows that the market, whenever it is reversing back, it will respect that every structure it has created. So if you have any questions so far regarding that, so you can ask. So as I have said now, in my 4-hour, I can start by recognizing my trend line that, okay, in this place, my market starts rising up to create a high. It bounces back. 2 touches on the trend line makes that trend line to be complete. It validates that trend line. And yes, that trend line is actually accurate. So my expectation here, if market actually reaches this place, is that market might rise before falling. Now, what could make the market, if I buy from this trend line, what could make the market not break this resistance? But because my expectation will be that since market rises here, it rises here, if market reaches this trend line, I should buy to make a move, a new high. But what if the market did not make a new high? It just stopped in the midway here before falling. What happens? So that is where we have premium price. When market reaches a premium price are actually located on the higher time frame, like daily and the 4-hour. Once market reaches that premium price, there is nothing that can make that market to move or break that premium price again. It is until it reaches another section before it begins to rise or fall. For example, if I recognize this as my premium price and I draw my trend line as uptrend, that is every past reaction means that market will surely make that reaction again. So, and I have recognized it as my premium price. Maybe I place my horizontal line here. if I place my horizontal line here and I recognize this as my premium price, it means that I am not looking after buying this trade because I am not looking after creating a new high. I am just looking after market reaching a place whereby market will reach before selling. Because of what? It has reached a premium price. For example, if you want to buy something, if you are selling something, you won't want to sell at discount. You always want to sell at a higher price so that you can make more profit. So that is exactly how the market is also doing. They want to sell the currency at a very high price so that they can make more profit. So if I recognize that this is my premium price in my higher time frame, all of my trade must be selling. What I will just be looking for is a pullback, I sell, a pullback, I sell. The question that should now come to your mind is that where is the pullback going to reach? That is where you now come up with a fair value gap. You come up with another analysis. You come up with a value structure point and all that before you can now start taking trade. It comes with a lot of things. So, but in the meantime, for you to get through all these things, is that recognize your premium price on your higher time frame, break it down break it down to the next time frame, lower time frame, maybe 4 hours. Know the structure that is closer to that premium price. So this is my structure that is closer to my premium price. How is market reacting to my structure? That is where you now start looking, okay, what is market doing here? Let me go to my 1 hour to see market reaction here. So now I see my market reacting this way. It might mean that market is reversing. It might mean that market still wants to sell. But in as much as market has not reached my trend line, let me still wait. If I see a buy, I will buy, but it would, I will have it at the back of my mind that since this is my premium price, I am not buying to create a new high. I am buying for a short-term buy. You understand? So that is how it is. So after analyzing that trade like that, in order for you to get a lower risk so that you can maximize your profit is when you now come to your trading time frame, know the maximum of how many pips per trade are you looking at. You consider your risk management, you consider your reward management, then that is where you can now execute the trade. Sometimes, if a trade is giving me more than 15 pips, I am not entering that trade, no matter how profitable that trade will be. I won't enter that trade. I will wait for another opportunity that will give me a less risk because I can't toy with it. So that is simply how the market is. I dropped something on the chart, on the group, on the USD. I don't know if you actually take that. So I said this market is going to sell because I recognize a PO high, a point of invalidation. I don't think all these terminologies I don't teach on the basic. I don't teach all these terminologies on basic test of Forex. I teach them on mentorship. So because this is a public session that I'm having you here, so that is why I actually I'm saying some of these terminologies. So once I post them on YouTube, anybody that is having access to it will actually contact me for more information. So after this, if you can if you can see the WhatsApp, if you can check your WhatsApp, I posted that this is a fair value gap. This place here is a fair value, is a POI. So this point of interest means that I am expecting my market to retest to this point of interest before pulling back. So if you take that trade, I know you should be profitable by now because I took the trade, but I actually took my trade from this place. So I actually take my trade from here because I knew that market just break this structure. This is a break of structure, and there is no how market will not retest after a break of structure. So after the retesting of the break of structure, you execute your trade and you take the whole thing. So now, here, I lost a trade here. Why did I lose a trade here is because I have recognized that this place, I have in my analysis that market is to react here. So because of liquidity, because I'm seeing a lot of stop losses here, a lot of traders must have put stop losses above this place. So my reaction is that after this place, I should expect market pulling back to clear out all the stop losses before selling. But eventually, I actually entered the trade here, but I opted out because I'm not satisfied with the way the market is moving. So, and I entered here again. Wow, I opted out so fast. I get out so fast. So eventually the market falls. So if I'm to expect market to make a reversal from this, my next zone is that I am expecting market to react in this place here, this area. Let me draw it. This area here, I would expect the market to react to this area. So once market react to this area, I'll be expecting a sell. If the market did not sell here, plan one, I will have a plan two. The market will sell from this resistance. So, and I will keep making my profit. So that is what I have for today's days. The way I trade is just simple. You can see my chart is so stuffy because I have a lot of things that I explain myself because I don't like to forget any of these things. So I don't like to forget any of my analysis when I analyze them. So I would like to understand why did the market do this? Why did the market go against my analysis and all that? So that is why you can see my market is so stuffy tonight. So, but in the meantime, I hope you get something. Do you have any questions so far?
No question, no question. I really enjoyed the little I was able to, the little we were able to cover today. It was fantastic. Even the last class the last public session you did that you posted on the WhatsApp.
Yes.
I downloaded it and I've gone through it and I was able to understand some things also from there. That's why I said today's session I was not miss it. So, but I believe you're also going to post this on the group, right, on YouTube.
Yes, I will post this one on YouTube, probably on Monday.
So I'll be able to. I also have access to it. Yes,
Okay, no
because I'm
problem.
trying to get more understanding concerning this forex trade.
No problem. But what I
And
would just say
I want
is
to use the opportunity to also thank you for
no problem, no problem.
thank you for the opportunity of the public section.
No problem, no problem. We are there. I know the market is not actually, it's not easy. Once trading, let me tell you the truth, it's not easy. It's not easy. If it's easy, everybody will be there. Everybody,
Yeah,
including everybody will be there.
yeah.
So for a whole CBN,
Easy way of making money.
exactly. So for a whole CBN, even could not even control the FX. They could not even control exchange rate. Look at the exchange rate now. So to tell you that the FX market is not easy, it is either you are in or you are out. So if you are in, you must put in all your effort to make sure you get your goal. And you must be risk discipline. Not just risk discipline again, you must have a reward management. What is your percentage you are expecting on your capital per month? Are you expecting 10% return on investment? Are you expecting 20%? If you want a 20%, I actually covered that in the test of Forex. That if you are expecting whatever return on investment you are expecting, make sure you have basis of assumption of achieving that percentage. If you have 10%, for example, you are managing $500 or $100 capital. So if you are expecting 10% per week, that is $10 per week. Do you know that you must put in a lot of hard work to achieve that 10%? So you must not give it out just anyhow. So your risk should not be more than 10%. Should not even be close to $10 at all. Your risk. If your reward is $10 per week, your risk should be around $5 or should be around $4 per week. So how can you do that? You must put in a lot of work. So the overall goal for you to determine is that are you making a trading? Sorry, please. Sorry, please, I'm coming on. So the question is that are you making trading a long-term business or you want to use it as another side income from your day job? So exactly. So you have to determine that. It is your determination of that that will allow you to know the kind of capital you need. If you are using a trading as a day job, as a living, I am telling you, you can't use $100 as your capital. You are just deceiving yourself. So you must find your way out to make sure that you are very good at what you are doing. So by then, you can go for any proprietary trading. Your proprietary trading will give you access to a lot of advantage whereby you can get this thing, that capital for you to do anything in the market. So my battery is running down. So I want to appreciate you for coming to this session. Sometimes I have more people. Sometimes I don't usually have students that will join, but
All
I
right.
do usually post them on YouTube, and there is a
Thank
lot
you.
of views that comes on it.
Everybody can have access. All right.
Yeah. So
All right. Thank you very much.
yes, thank you very much for coming
Good
as
night.
well. And I appreciate it. Good night. Bye.
Good night, sir.